All right, good morning, everybody. Let me know if y'all can hear me okay and see things okay. Looks like on my end, there might be an issue. So yeah, confirm with me in the chat if you can hear everything okay, if you could see everything. Hopefully nothing's lagging. For whatever reason, my internet looks less than adequate. Chowezi said everything on my end is okay. All right. Good morning, Chowezi. The week's going good. We pretty much have the holiday week, right? CPI as well. So depending on the vote today, that's going to determine whether we can get this data or not, right? So it says tentative. We may not have any news at all, right? They may not allow us to have this because apparently the information that's gathered here is government funded. So it's been like what, 2 months almost since we've had a freaking a CPI announcement. I mean, they've just been playing games, honestly. NFP too. So we'll see if that changes. Hopefully today the vote can go down and the government can be reopened, so then we don't have to be worried about tentative, maybe not happening, right? So morning ICT Disciple. I'm doing well, brother. Hopefully you guys had a good weekend, and hopefully you didn't do anything dumb yesterday, because day before, day of, and day after a holiday, automatically your thoughts should be high resistance, low probability. Smart money is not taking trades during a holiday. They have lives to live, just how, we should all be thinking, around certain times. So yeah, yesterday we didn't really do anything. I backtested with my private group, talked about FX replay, did a bunch of things related to that. But other than that, we didn't really do much, right? What's up, George? Appreciate y'all hopping on. Right, it's not Tuesday, right? But this is just the way it is. When there's less than favorable news, or no news at all, right? Or a holiday, it's best to relax, right? Take a day off, take a breather, and relax. All right. So yeah, if we take a look at the 30-year, we see that the new week opening gap is there. Start on the weekly chart real quick. So again, remember what I was saying about this on Sunday? How this fair value gap is treated is going to determine whether we're going to start to reach up into this level. If we close below it, right? If this continues and we end up getting back down below here, that should end up, potentially allowing the yields to drop. We're beyond the first week of the month, so we're still thinking power 3 always when it comes to the monthly time frame, or from the monthly perspective, because we went into a new month, right? Like 12 days ago. So the open for the new month was here. Okay. Let's actually go to the daily chart, get a little closer. So yeah, over the weekend is when the new month started, but the open price is here. So what have we done so far? We basically went up above, hung around the open price for the month, which is here. So if we're going to think that this is going to drop, rallying above the open price for the month in that first week is definitely something we like to see. So if we start to displace and get down below these levels in here, that'll probably drag the yields lower. And again, that impacts what the DXY is going to do generally, and it's reverse correlated to what the indices do, what the foreign currencies do. So, if the indices were going to run higher and we see the yields dropping, that's a positive correlation. That's something we want. And that supports the idea of the Nasdaq going higher. Okay? And obviously if it goes the other way, that supports bullish DXY and then should have a downside interest presented for the Nasdaq and the other indices and the foreign currencies, right? So we're kind of just stuck between, this high, or let's go with this high, the highest one, and to this low. So we're back to equilibrium pretty much relative to this point in price. We're almost there. So this is going to be very important for us to watch. Is it going to close below this and displace? If it does, my attention goes to the lows down here. If we stay above this, right, which we're kind of just going back and forth, so you have to make an allowance for a contingency plan just in case, right? This is not overall bullish until we can prove that it gets above this monthly fair value gap, stays above this weekly fair value gap, and then displaces above this high. Because if you move up in time frame, you could see that's a larger time frame shift, right? We got one order block that's been taken out, right? Kind of pulling back into that. We have a wick in here we got to watch too. So there's a lot of levels in here that should potentially, if price is going to go higher, hold price and get us up to the highs up here. But if it breaks down below it, again, we're pre-market open right now. We're on Wednesday. So we need to wait and see how it's going to treat this to really get a solid determination. Right? So that's going to be my opinion on this and what I'm going to watch for the yields. Remember, the yields impact what the DXY is going to do. They heavily influence what the DXY is going to do. And then the reverse impact goes to the indices, right? So lower yields would mean bullish, potentially bullish indices, okay, and then lower dollar. But again, we'll have to just wait and see what it decides to do here. This fair value gap in here is also significant. Okay, this is a 2-day. It's also just a normal daily fair value gap, but it's also got a weekly fair value gap in there, right? Like I said, so yeah, we'll use this to gauge what this is going to do, right? And we'll come back to it maybe in like a little while, maybe like an hour or so, see what it's doing. And then of course we got the bonds, which positively correlates generally with the the indices. Right? So opposed to the DXY. So if this goes higher, DXY will go lower or should go lower, right? That's a healthy symmetrical market behavior, right? We got this inversion fair value gap. Price is staying above it. So if the bonds go higher and then we see the yields break down below this level in here, we have two indications supporting potential bullish indices. Okay, so we always start here no matter what. We don't just jump to Nasdaq. We don't just jump to the DXY. Because if we do that, we're basically trading naked. We're assuming that one market dictates what that one market's going to do, when in reality, the market is connected. So everything works together, and that's called risk-on, risk-off analysis, which we kind of go over every Sunday and kind of break down in great detail for like 2 hours every week, right? And so yeah, we've done that all year. I've done that for years at this point with my private group, but there's good reason, right? Because market symmetry, symmetrical market behavior is the first step in identifying if we're in a high probability condition or not, right? And everything else is just kind of an addition, but it all starts there. Okay, and we got the fair value gap in here. Right, this is a weekly fair value gap. So I'm not necessarily entirely off trying to see this go higher until we break down below this. Because if we break down below this, we have a down candle, we have a fair value gap inverted, and then we have a swing low that gets violated, right? And then we have another one here too, right? If it was to leave this candle here and then violate it maybe next week, because this is a weekly chart, right? So far, it still looks like it's bullish for the bonds. So what does that mean? That means that if we see reason to go higher in the Nasdaq and lower in the dollar, we're going to be supporting that, because on the back end, the two significant drivers behind those markets, both the yields, which indicates or dictates what the DXY is going to do or influences what the DXY is going to do, and the bonds, right, if they're going higher, that influences what the indices are going to do. So again, if this goes higher and the yields go lower, those are two powerhouse indications that we could trust buy-side liquidity being targeted in the indices. Okay. So if we come here in the DXY, what do we see, right? We see there's an order block here on the daily chart. We do see that this is a retracement. So we see that there's a slight crack in correlation overall, right? The yields look like they may be interested in going lower. If they hold and rally, that supports the DXY running up to the buy side here. But we see that there's somewhat of a crack in correlation. It's not as clear, and it's typical coming off of a holiday. Day before, day of, day after a holiday can generally present us with a crack in correlation. And when we have that, we have to just decide, obviously, what's happening on the chart relative to the DXY and the other assets like the currencies and the indices, the three together, and go off our correlation in that regard. And then come back to the bonds and yields, right? But we keep them in our mind just in case, because if things open up and support what the DXY or the indices are doing, then we can end up trusting that it's going to be a trustworthy delivery, right, to whatever direction it's looking to go in. Okay, so that's why we always stick to the bonds and yields always first, right? We always glance at them. We keep track of them the whole entire session. It's just the way it is. If you guys have been with me all year, you've seen we've been high 90% accurate, if not 100% every single week on a week-to-week basis. And our ability to be flexible also comes from our ability to understand market symmetry, and then of course PD array relationships and our experience within the realm of that aspect of things, right? So that's why we spend a lot of time on each individual piece rather than, what's the bias for this one market. Let's skip everything and go to that market. That's just not how you should be doing things, and I'm not going to encourage you to do that by doing it myself, right? But yeah, so with all that being said, right, we see that there is a retracement here that we did call after taking out this quarterly high. I said watch the response if you go back like a week or two ago, or I think it was like a week ago. Yeah, this week is what ran that out, so last week. So if you go back to last week's Sunday call, you could see how I had a markup saying watch the reaction when we hit this high. It could probably retrace because it's significant. And what do you know? Price retraced, created a fractal high here. The next 1 to 2 candles seeked sell side. What did it seek? After this third candle, it seeked that daily fair value gap. And what's it done since then? Tapped into that. If you also take this low to that high, we got equilibrium, came down to a discount. So if we are going to go higher, this makes sense to continue. We could be overwhelmingly confident that we are going to tip over and maybe take out some of this if this creates an order block and then violates that swing low. Okay, that would be a pretty solid order flow confirmation that buys are going to be done, and all of this was fake just to run price up and then continue to decline. But order flow on the DXY is still bullish, right? We still see order blocks being held, fair value gaps being held, middle portions of the up wicks being held, okay, and it's just continuing, and it did continue until we got to here. So again, we're gonna have to see what this is gonna want to do. I wouldn't be surprised if we do look to reach up into this level. If we do end up doing that, that may have a heavy influence on the currencies, which we can kind of see taking place here, and essentially it could potentially push that lower and maybe target this. If it doesn't want to get that excited, maybe just simply target this. We could see the quadrants here. Right, this is a weekly wick, right? It's encapsulated inside this low in here, or inside these candles. If you go to the weekly chart, you could see that there's a wick there. That wick has pretty much been pretty solid for a reaction. So external range was taken here. It seeked internal range liquidity. Now that we've fulfilled internal range, if we're going to continue to drop, this high is going to have to continue to hold as an intermediate term high if we can get another swing high to form to the right. Right? So we'll keep that in mind. It looks like it could have a reaction targeting the lows down here, so I'll keep my attention down there, at least for now, for the currencies, especially if we see that DXY is going to go higher. If it does go higher, again, that'll have a pretty heavy impact on what the currencies and the indices are going to look to do. So far, the indices look like they are holding strong, right? Like they've came down They hit this wick down here, kind of swept out this sell side, and then we kind of overtook all of this delivery. Hasn't held really in this order block. There's a liquidity void, and then of course, if you want to take the whole range, we just got a straight up gap in there. And I did mention on Sunday that I said that if we can break this order block, close above that order block, the 50% level, and then close above the gap in here, which is a liquidity void, plus, it's just an overall, gap from this close. And let me put that closer to this open here. So again, getting up above this, holding it like it is a pretty strong indication that price is probably going to continue, at least for now, to continue to reach higher. I had this highlighted on Sunday as well. When we were way down here, I said that if we get up above these levels, the objective will be here potentially, because now we've invalidated this order block on the daily chart. Okay, so it's gotten above. Right, we got down close candle supporting here. We got to see if this down close candle is going to be supported. These consecutive down candles, that is, I believe, a singular 2-day bullish order block. It's also a 2-day fair value gap in here, but we can kind of just go off of this, right? So yeah, unless this low is taken out, unless we get back down below here, there's really no strong indication other than the DXY is rallying, the price is going to end up tipping over aggressively. If you did want to kind of look at these upper time frames in here, right, we can come over here, take some of this off. Could see this volume imbalance. Again, as long as we stay above this volume imbalance, which is simply the gap that I just highlighted here, as long as we stay above that, you see how, yeah, as long as we stay above that, there's really no reason to think that this order block being traded to is not going to push price to the buy side. We're not done yet going higher. Okay, and if we start to tip over and get back down below this type of level, and then when we go back to the 8 hour, right, if we continue and break down below here, which is, again, getting simply down below this, then we may start to have an argument to target maybe some of this gap in here. We may have a reason to target some of these lows down here. That's a little bit far away for us to assume that right now. This does also, if we do go higher, it does look like we're forming a market maker buy model scenario. If that market maker buy model scenario ends up failing here and we break down below this and shift below this low, these consecutive down candles, maybe on a different time frame, has a bullish or a bearish breaker. Let me see. Yeah, I guess we could look at that, right? If it was to break down below that, this down close candle would have to hold if we're going to continue to trust that sell side is going to be targeted. But we do got relative equal highs up here. We do got this gap. I don't think it's likely for them to leave that. It looks like they've raced up there. Monday has been very quick, right? So generally when the early portion of the week is very fast towards a particular direction, that could lead to a pretty significant retracement of some kind. So we'll keep that in mind too as a contingency. If it breaks down this high to that low, we should be able to see the 50% of that be respected as a balanced price range. We should be able to see this area in here, right, the gap in there. We've traded a lot through that. So if it's going to continue to go higher, it should be treated also as a potential BPR. Again, just more reason why if this gets violated, we would not be able to trust the buy side scenario anymore. Especially if that happens and DXY starts to just continue to rip to the buy side. But these are all things that we're going to have to obviously observe. We're not going to go in there gunslinging right away when the holiday ends. The day before, day of, day after a holiday is automatically classified as a low probability, potentially high resistance environment because liquidity is now flooding back into the market after things were closed for Veterans Day, a bank holiday. So there was a minimized trading session yesterday. Let me go double check real quick. Oh wait, did it? Oh, it actually delivered. I thought it's a bank holiday yesterday though. Yeah, that's strange. I didn't know that it was just continuing to deliver on a bank holiday. That's strange. Whatever. It is what it is. But yeah, so I guess it used yesterday's price delivery and rallied up. Didn't really even look at the chart yesterday because holidays I don't look at the chart, especially because most times they close half the session. And smart money, like I said at the beginning, they're not looking to trade or engage or be on the markets when, you know, they got holidays and family to be with, you know, so. But yeah, so just a reminder, those of you that have been with me from the start of this video, those of you that like this content, if you get value from the content and appreciate the stuff we do here and support what it is we do here, definitely don't forget to like the video, subscribe to the channel. It allows for the algorithm to push us out and get in front of people that want to learn, you know. So, and it's free, right? So I definitely appreciate all the support and love and testimonials you guys have been giving me over the last year. It's been an amazing year for those of you that have been with me, and you know, the chart speaks for itself, you know, so yeah, appreciate you guys that support the channel, right? But yeah, so we got 5 minutes till the open. If we pull up the London or the sessions indicator down here, could see how London's low basically is right here. So if we go to the 15-minute, looks like DXY is on a massive tear to the buy side. So we got to see how that's going to impact. Is it going to be cracked in correlation, or, you know, is it going to fall in line with DXY going higher, and then maybe getting a breakdown below this? If this high stays intact and this failure swing stays intact and we end up violating this low, I'm going to look at this down candle as a mitigation block, and that may set the stage for us to come down here and kind of justify some of the stuff that I was just saying about how when Monday is fast, generally it'll have a pretty significant decline sometime during the week. Sometimes it'll be like a midweek reversal. That's a weekly profile ICT talks about. If you've dug through his 2016 stuff, looked at his short-term trading section, he talks about the midweek reversal. A lot of times, again, that comes from a fast start of the week, sometimes a consolidated start of the week going into Wednesday and Thursday. And then, of course, if there's equal lows that are logical, sometimes those can be targeted. Not always, right? But if the characteristics are there, it's good to have those weekly profiles committed to memory, because then you can identify it, you know? So I'm not too sure what that is. Oh, actually, I know what that was. Yeah, so this is a previous day's low. So remember, some of the first things that you do, identify previous day's low, previous day's high, London's high and low, right? Those are part of the liquidity mapping list. I give that every week. So if, you know, this does end up tanking down below this and we end up really attempting to get down into here, we may also be able to classify this, if all of that happens, right, and it just rampages down and DXY keeps going higher, we may be able to classify this as a market maker sell model. And then, you know, first stage accumulation, second stage accumulation, smart money reversal, first stage distribution, what happens somewhere in here. Maybe even use this gap, the high of it, and the new week opening gap, to then break down. If it gets down below this also and retraces back a little bit, it should be able to quickly look to purge out all of this liquidity. There's also a gap in there that we want to keep tabs on if that does happen. pretty massive gap, similar to this one up here. You can kind of see how there's so much gap risk right now in the market. It's just part of the time of the year. Cracks in correlation. It's characteristic of this time of the year. That's why ICT goes into hibernation till February, because most of you guys will probably do that too once you get to where you're trying to go with trading, because that there's times that are less favorable. It's less clean. It's more cracked in correlation. It's a lot of stagnation, very strong one-sided movements that turn against you and come back, like basically little to no follow through after displacements. Not always, right? Doesn't mean that every day it's going to be that way, or also doesn't mean to be fearful, but at the same time, it's like being in a battlefield and you hear gunfire. Are you going to run into the middle of the battlefield and get your head blown off, or are you going to wait and choose a better time to engage? Or at least pull back on how quick you're moving. It's the same thing in this. This is a battlefield, and the war is about to begin in 2 minutes. Okay, so just some table setting that I'd like to remind you guys of. Okay, so we'll keep in mind this regular trading hours gap. So if we break down below this and we do start to target sell side, we got previous day's low. We got the rest of the gap in here. It's going to have to stay above this to make sure to be bullish, to be confident in bullishness. So the less time it could spend down here, the better. And if it runs down, maybe takes out these relative equal lows, sweeps London's low, and then gives us a strong displacement, maybe a fair value gap that gets overlapped, maybe a shift in market structure also, then we can try to get in line with that if it does end up being that way. But for now, we do have a contingency idea, that being these equal lows. If the buy side fails, I'm going to favor this potentially continuing to go higher. Okay, but we'll see if we have to be flexible. Higher time frame wise, we're pretty much, for the indices, looking like we're still favoring to the buy side. So we'll see if that's something that price wants to do. So now we got the open. Let me go make sure that all my stuff is set up properly. So we did take out this buy side liquidity here. It's a stop rate here. And there's another stop rate over there from previous session. So we've had a pretty fast buy side delivery for London. We've had a fast start of the week. So again, it's not unreasonable if they're going to want to target sell side for a little bit. We're just going to have to see what the reaction is going to be in here, since we're above this weekly volume imbalance, which is also a liquidity void. This is going to be very, very decisive, okay? Because it'll stop being bullish and seek previous day's low if this shows that it doesn't have any ability to hold price to the buy side. So now we're getting the displacement, so let's sit and watch how this down candle is going to behave. Because we got a high, low, failure swing, breakdown. So that is what a mitigation block looks like. So yeah. And again, if we get down into here, this whole area and price, this will be something that we would want to see as a potential second stage distribution if it gets down below that. So you can, based on what I've just said, I'm not willing to take a short in here unless it gets down below this. I'm willing to let the first 30 minutes go, which many of you guys should do. Part of the rules ICT teaches is to let the first 30 minutes go so you can get a feel for the opening range. Clearly that's pretty aggressive, right? So, and it's been really, really fast to the buy side. So it's going to be very important for us to watch and see how this behaves, okay, and then see how this weekly volume imbalance either holds or ends up getting completely disintegrated, putting us below this low. And again, that would be my trigger to think, all right, it's safe to take a short if my model presents itself somewhere in there on the lower time frame. All right, but we've now gotten below the open price. That's what this is. We've now pretty much solidified the entire regular trading hours gap from yesterday to today, which is, pretty interesting. Let me go double check if we had any SMT. So yeah, we did have SMT there at the highs. But the Dow, I mean, look at the Kraken correlation, right? Like I said a minute ago, this time of the year has a strong likelihood of cracks in correlation versus, other times of the year. It's because, it's heavy holiday time and, whatever the case may be. That's just kind of what they do. If you back test, you'll see that this is the case. Doesn't mean there's no opportunity. Just means you got to make sure you're cautious and lower your risk. So yeah, we're going to see how this low being violated reacts to price. Got the Dow just, ripping people's face off, continuing. We actually created a new all-time high. Oh, snap. I didn't realize the Dow was all the way up there already. So yeah, that's interesting. This weekly high. Yeah, that's a devastating drop for anyone that was holding buys, getting greedy. So yeah, this was the London session. It's kind of choppy. Did run up above. We are above the open price. It was pretty fast going into London. So again, a fast London, fast, pre-market delivery going into New York. This is typical for them to do this, right? To then pull against it. That's why you wait. When you see fast London, you go, or a fast London or fast previous day, you got to go into the New York session or the next New York session cautious and not trying to feel like you missed something from, the previous delivery, because that is what is being used against them right now. Right? This is a pretty dynamic delivery, so, it's really making an argument for this to be a market maker sell model. And it would also be go to the higher time frame, the 1 hour. We may end up seeing this as a failed market maker buy model, this whole entire delivery in here. If it doesn't hold this weekly volume imbalance, confirms that there's a failure for the market maker buy model to form, and then maybe giving us early signs that this low is in jeopardy. So again, hopefully I'm highlighting the importance of this level in here clear enough, and why we're being cautious and waiting and not being too jumpy, too overly aggressive. So hopefully that makes sense why I'm pointing your attention to this stuff. Roger said, why is that your trigger again? Which, you talking about this weekly volume imbalance? Is that what you're referring to, Rodri? YM's leading the assets out of the... Yeah, it is. It's the strength holder, that's for sure. So the other two may be a six sister. But yeah, we'll see. Looking for sales below the orange line. Oh yeah, so this. So this here, if it drops and gets down below that, and we start to really slam through this weekly volume imbalance, this should act as a balanced price range if it was going to continue, which it did, right? It filled out this whole market maker buy model here, okay, as it was moving higher and getting above the weekly volume imbalance. So this range in here that's sideways like this, if it gets violated, that's a previous balanced price range in the market maker buy model that was completed. So that's why if this gets violated, I'll use that as a conservative adjustment, right? And basically take the higher time frame delivery to the buy side, the failure to deliver to that buy side, as a signal to look for shorts towards these lows, because this will be a invalidated previous balanced price range that continued to hold here for buys, but then fails here if it gets down below it. right? And then of course that can also be complemented by this weekly volume imbalance not holding any support at all and just getting traded through, and that's a higher time frame level being taken out, right? So these are the early signs that we may not continue, right? Basically creating a market maker sell model that delivers on the lower time frame. Right, this here, you could see how it acted as a balanced price range up until it did not, right? So one's already been violated in the market maker model breakdown here. Now, if this market maker sell model fails and we end up, displacing from here, leaving this low, that's another really strong indication that the sell models are no longer, or they're just not going to be fulfilled. So buy models will continue to remain the interest, similar to how it did here, right? We did leave equal lows here, right? But again, it got back above this weekly volume imbalance. So it makes it less likely it's going to take that out. Unless, of course, this gets violated and we start to look like we're turning into a market maker sell model, right? And then, of course, breaking through this weekly volume imbalance gives us a larger perspective view that buys are probably not going to be really interesting, right? We don't really know the exact reason why ATM. We're not really too sure exactly why. Generally, we're not privy to that information. Like why something's cracked in correlation, like the technical aspect. We don't have to know why. We just have to know that there's a crack in correlation. And when there's a crack in correlation, that means you're in low probability conditions, right? If things aren't doing what they're supposed to do or generally supposed to do with risk on, risk off, basically the symmetrical market behavior, that's the first indication of either high probability or low probability. If it's symmetrical, you have one sign that we're in pretty healthy environment, right? Relationship-wise. If it's cracked in correlation, there may be something taking place that we're not privy to on the back end, which is causing the crack. Byron, yeah, you know the vibes, bro. We're waiting till the macro. At least 5 minutes. 5 minutes left till the 5 minutes before the macro. All right, so we'll keep that in mind, and then see, what price wants to do related to that. This consolidation in here, if we go to like the 1 minute, yeah, we have that larger one that I've been pointing to as a possible market maker sell model. But if you take it from a smaller view, right, we got a smaller one too. Consolidation, accumulation, we have reaccumulation in here, right? Smaller than obviously the big one. But then we have a smart money reversal. So if we target this low, market maker sell model on the lower time frame could have been something to identify. But again, I'm looking for a larger view. I like getting in line with the bigger picture, not just like tiny fluctuations in price. That's not to say that that's not an effective thing to identify. Market maker models are on every time frame. A market maker buy model unfolded here in the smaller view. Like if you go to the 30-second or 5-second or 15-second, and you were maybe targeting the buy side up here, you could have used that as a model, right? You could zoom in and see all the different characteristics still present. Accumulation, reaccumulation, smart money reversal, first stage accumulation or distribution, second stage distribution, and rapid repricing to the buy side. But yeah, we could clearly see that they're fairly interested in trying to get us down there. It's not really anything for me personally to want to engage. Let me actually outline this. Where the hell is it? See, this is kind of how I'm looking at things right now. It does not look like at this moment that buys are interested. So my attention is potentially this low here. We'll see if something can get us down there. There's nothing for me to personally engage in this rapid movement. I'm not willing to catch the falling knife right now. There maybe was an argument for this, right? But again, we're inside of a higher time frame level. Narrative has not fully been changed. We're starting to see some early signs that it might. The full sign would be getting back below this weekly volume imbalance. Because if we were to stay above it, that's a bullish indication. Okay, so again, this is going to be a very important level. That's why I'm not willing to catch this falling knife, right? And just kind of the way it is. Yeah, we'll see something else later. But yeah, let's pay attention to this low here. All right, because again, if it gets down below this, we got to watch. Is it going to just wick below that, right? Or is it going to do something like this and get down fully below it? If it does do that, right, and just completely displace, showing no effort to stop, and just continues to fall like this aggressively off the mitigation block that was formed, we'll probably look to target these equal lows down here. And it just goes back to what I said about fast Monday, when there's like little to no manipulation. Generally it's going to give you a pretty significant retracement at some point later in the week. All right, doesn't mean it'll entirely turn around and target down here. Not necessarily. You always got to stay rooted in what's happening here. So far, it's disrespected this, it's disrespected the wick, and it inverted this gap in here, basically got back above it. So that's why this is important for us to watch, to see if we can't get it to hold and get us up to the gap up here that's very widely open, hasn't even been attempted. It's just been kind of left there. Now we've built pretty solid liquidity pools up there. We left equal highs up here too with this high, right? So that's not necessarily something that's overwhelmingly encouraging to trust a short. We have relative equal highs up here. These relative equal highs up here alone would keep me out of something to the downside like this until it proves that it wants to get to the downside. And it, overall really wants to leave these equal highs, because that's too perfect. Not only that, we have a gap plus another layer of equal highs. So if I'm going to look to short while we leave that available, I'm going to really need it to prove it. And it takes time for it to prove it sometimes by overtaking certain levels. And what does that mean? That means that those are times where you'd have to wait for more information if you're a responsible rule-based trader, because otherwise you're just gambling, especially when correlation's a mess. That's, ICT talks about this all the time, all the time, but it goes in through one ear, out the other, because most of us are looking for specific things when we're going in and studying rather than listening to the full things that are being spoke about, especially on like Twitter spaces, so it's important that people that are at a level that is reasonable, like I am, and a lot of you guys in the chat are, that are part of my private group, it's important that we remind traders that are still just learning about these things and what's important, because it's very easy to look for something that you want to see versus what you need to hear and what you need to learn, and it's kind of just the way it is. So again, this is a moment where I am not willing to catch the falling knife. It's a day after a holiday. I have very strict rules around day before, day of, and day after a holiday. Obviously, this was pretty low resistance to get down below here. And it looks pretty obvious that they're now trying to target the low right here. We got relative equal lows here too. But again, that's still a delivery going into a PD array that we are using to try to justify if price is going to continue to hold higher on the higher time frame. And we could see now that it's really slid down, right? So again, I'm not too interested in trying to engage this just yet. We will see how it wants to deliver into this, right? Because now we may end up seeing this act as a resistance level. A previous balanced price range in a market maker buy model that was completed has now been invalidated and now turned to an inverted balanced price range going potentially bearish. Okay, so let's see how the midpoint of this behaves. We're also inside this as a new week opening gap. That volume imbalance we see on the weekly chart, that's also a new week opening gap, previous new week opening gap from a couple weeks ago. Look at DXY. DXY is smashing lower. I think the indices are all cracked in correlation, right? The Dow is just raging to the buy side. The S&P is just raging to the sell side. Nasdaq, the weakness holder, right? Again, there is a massive S&T here. Basically a pretty significant crack in correlation. I guess it was present here before we saw this. I didn't have a chance to really glance at this and identify that till it was already tanking. But I guess that somewhat is a pretty solid justification. If when DXY was still running higher, that this little retracement in there that we looked at was potentially a reasonable idea to engage, maybe to try to target this. I think that already overshot it though, so yeah. Yeah, we're on a rapid rampage to the downside. We have no news today also, so again, no news puts you in low probability conditions. Damn, so see, they took away CPI, so I guess we don't have any news the rest of the week. Wow. We'll see. We'll see if the vote goes good today in the government. They'll potentially put it back on, but yeah, we could see this gap here. It's still wide open. So again, if we get down below this, that's more long-term interested in trying to tank. Maybe back to the gap down here. That'd be my target if we get down below this. Remember, we got down below this level in here. I said that it makes it a little bit more likely that we're going to end up blowing out this low right here, right? So it gets below this. It's invalidating the BPR, basically inverts it. So we don't want to see if it's going to continue to be bearish. We don't want to see it get back above this range in here. Okay, and then we got things like this, right? Little gap in there. Continue to follow price and the PD arrays that are around it. Just watch and see how they get respected or not. But yeah, me personally, I'm not interested in catching this falling knife at the moment. It's just too rapid. The correlation is cracked. At any moment, they could flip the switch on and get it right back in line with correlation. And if it's correlating and DXY is declining while the indices are declining, that would mean that a rapid repricing to the buy side may happen, because you may get in right at the moment, which a lot of us have done, where it's falling and then we get in and that's the time that it retraces. So yeah, we're inside the macro right now, so that's potentially another reason why it may look to retrace first before it gives another leg lower. So we did have somewhat of a reaction in here. DXY is opening up again. All right, we've got this fair value gap that we've pretty much attempted to break into. We can see that we have a high, low. I think I'm going to want to use that actually. Monitor what that looks like. Got this up candle. This is a breaker here. High, low, higher, high. So that's an opposing PD array to this down movement. So yeah, let's see what happens when we get inside this gap in here. Just a reminder, we're inside of the 50% level here of this gap. So if it's going to tank and this is going to be reactive, this should be able to hold and push price pretty solidly down from this middle portion here. So let's watch how this behaves. So yeah, if this continues to drop in the DXY after we've taken this liquidity in here, and if we were to invert this fair value gap, we would have to watch that and see, is it going to act as support and then give us a run higher? Or if it breaks through it, hypothetically, if it breaks through it, like overtakes it with a bullish candle, we would have to get back down below it, use it as an inversion bearish to then be able to find an opportunity to trust price continuing to go lower. If we can't even get back into this whatsoever and it just keeps ripping, that's going to potentially act as a measuring gap. Kind of left the breakaway gap in here. Why was this a breakaway gap? Because we got low, high, like buy side delivered, and then sell side quickly traded through. So it's reasonable for this to be treated as a balanced price range and not need to come in and fill the rest of it, creating the conditions for a breakaway gap, right? A breakaway gap is basically seen when there's like trading that's already happened inside of the displacement when you look to the left, like something like this. Or maybe if one of these candles did a wick before it gave that displacement. That's another variation you want to keep look out for when you're looking for breakaway gaps, stuff like that. So yeah, that definitely unfolded in here. Not only that, created a mitigation block, right? So just even more reason why this was left available. So hopefully that makes sense. And hopefully you guys understand why today is a day after a holiday that you need to chill out, right? You don't go in a day after a holiday and just start gunslinging. Because think about it, if you would have chased a short in here, right? What if it rips above to retrace a little bit? And you were chasing price, right? There's no reason to chase price. You know, if you spent any time here and you've watched me do these live calls, we've taken trades way later in the session and it's totally fine. You know, we find the moves happening because there's continuation variations of numerous models happening regularly, you know, and all you need is one. You know, there's multiple macros in a day. So those multiple macros could generally offer a continuation, maybe a reversal, right? Something that's worth engaging if you got the narrative correct. But you won't see that if you think, oh, I missed it, let me go chase it and blow my account, right? Like you won't be able to get involved. Nico, they took away CPI because it was tentative and it depends on the vote today in the government. So if we go to the 30-second here, this fair value gap, if it can't be traded back into, and DXY, if it does look to run higher potentially, we may be able to see if this gets inverted. We got a shift in market structure. We got a breaker here. Right, so if it is going to continue to drop, you know, this may be something that sets up that leg lower inside this macro. Again, it's highly risky because it's been so aggressive. Right, DXY, none of the correlation is in play at all. Everything is still remaining cracked in correlation, doing whatever the hell they want to do. So any type of execution, like that little idea that I just gave right there, you would have to engage knowing that risk is higher, so you cut your risk. But this right here, I mean, it may be reasonable. It may be what takes us down below and outside of the gap down there. Whoops, it's a little bit louder than I want. Can you guys hear the music? Is it too loud? I'm still trying to test how loud stuff is. Still one in the chat if it's okay, if the volume is okay. So the only way that I can test this is by asking you guys. It doesn't really give me a good indication. I don't hear it at all. Oh. Well, guess that's the answer then, huh? Do you guys like music when we're doing this, or would you rather it be silent? No music at all. Interesting. Let me know if you can hear it when I do this. You can hear it now? Okay. Alright, so yeah. And, you know, if you guys don't like music, just let me know. I try to make these calls so as catered to you guys as possible. Some people like the silence. Some people want music, right? But I definitely want to do things that you guys will enjoy. Of course, I gotta have like the no copyright stuff, right? So But yeah, so let's pay attention to this. Let's see if that's going to continue. If DXY runs higher, it should be able to continue. This is a stop hunt. This is a very low time frame. We are pretty close to the sell side. But again, we got correlation issues. So if you're going to take a loss, right, if it's going to be a less probable day, today is going to be one of those days. It's a day after a holiday, automatic, low probability. Merge that with the Kraken correlation. And I mean, it's kind of just the way it is. Turn it up. All right, let me, all right, say less. I'll turn it up. Yeah, I wish I could play the private group lo-fi playlist, like the jazzy stuff that we play all the time. But it's all copywritten. If I do it, I'll get a copyright strike. So I have like a very limited library I can use. If you guys find any music that's not copywritten or has like no copyright, definitely send it to me so we could do it on these YouTube live calls for you guys. And again, just a reminder, if you guys get value from the content, definitely don't forget to like the video. It does a lot for the channel. Shows me that you guys support what's going on, that I should keep doing this, because I used to just be in my private group. But I mean, I've gotten so many testimonials this year. I don't think I'll ever get off YouTube because, I mean, I like seeing people win. I like seeing you guys grow and, you know, be blessed by this industry, you know, so I've been listening to this. Get AI. Yeah, oh, that's a good idea, Matt. That's a great idea. Get AI. If one of you guys can go do that, like jazzy lo-fi, I'll see if I could try to do it too. Chat GPT and Sono. That's the thing. I'm not sure if it can make an hour long. I think it could do like a couple of them, like an hour's worth, and then we can kind of put it together into a PD or MP3, and then we can create our own. But yeah, I'd love recommendations from you guys, so we can maybe make a playlist for the private group, and then private group we already have a lot of stuff. I'll take some recommendations for that too, because again, that community is for you guys as well. But those of you on YouTube, right? If you guys have, if you make some AI stuff, send it through, and maybe we can create a playlist together using good old Chat GPT and Sono. So do you see what I mean right here? How I mentioned that it's highly risky, right? Yes, there was a continuation breaker, right? A lower time frame one, low, high, lower, low, but it's so aggressive. DXY is tanking, so at any moment they can flip the switch and say, all right, guys, we're going to now get back in line with correlation. And then, you know, you'll be the one that caught it as it printed earlier, catching the falling knife, and you get stopped out. You know, and it's just needless losses when you can just sit, relax, chill, realize that you're not missing anything, and let price set up. You know, use time to your advantage. Okay? And to use time to your advantage, all you got to do is wait, right? It's like one of the hardest things to do. So yeah, let's see. Like I said, if it inverts this fair value gap and DXY continues to tank, all of this may have just been a liquidation because we're still above that weekly volume imbalance. So let's see how this is going to be treated in here. Right? The risk that I was pointing you guys to about this manifested, which is, you know, justifying why I've been having you guys wait and not catch the falling knife. So if you guys had like any type of conflict with, oh, I think I'm missing something, here's your example of the fact that you're not, right? You're watching price delivery responsibly, okay? And we're waiting for price to come to us. And we're letting time set things up, right? So this fair value gap here that I highlighted earlier, right, this breaker in here, you could see that it's acted as an opposing PD array. Displacement, that displacement went to a PD array opposed to the downtrend. And what has happened? It's triggered in a retracement, right? Carlos raise a model to the upside. Possibly. Well, actually, at this current moment, absolutely. There was a 30-point opportunity right there, Carlos. It's definitely a spectacular model, that's for sure. The Razor model is amazing. Amazing. Yeah, I kind of want to see what this is going to do. Let's move up real quick. Let's see if we can find a little bit of a larger. So we do got this fair value gap in here. So for those that don't know, FVGN stands for fair value gap neutralized. So we got this gap in here. Let's see. Right, we got an order block here, fair value gap. Let's see what happens as a result of this. Is DXY going to keep pumping? Oh yeah, yo, parrots. Yep, gotta hit the parrots. Yo, Carlos, if you took that execution, you better throw the freaking parrots, bro. Send some screenshots to the private group, because your eye is getting sharper with the model that I've taught you guys. Exclusive, right? Yeah, let's see what this is going to want to do here. If we're looking at the 2-minute chart, right? If you didn't engage something on the lower time frame or didn't see anything, you just move up, right? And then see if there's something that can perform here on this time frame. So we got a run on stops. We got a breaker here on that lower time frame. So it's going to have to hold this if it's going to start to lean more towards the buy side. And we'd prefer to obviously see DXY continue to decline. But if that doesn't happen and we shift above this, all of this may have just been a simple retracement, come up into this fair value gap. And then if it gets down below that fair value gap, if it closes below the 50% of this order block, and then we blast through this area and this area, this candle will become a bearish breaker. And it's a larger 2-minute bearish breaker. So if you can go down to the lower time frame when that happens, after the stop raid, with DXY going higher and price failing to really push to the buy side, that would be a scenario that potentially could set up a short to target the previous day's low. Right? And, of course, this order block here, there's a fair value gap in there, right? We got a stop run. This order block, if we were to create another order block and displace above that and then get above this high here, we may be set to potentially frame this out as a market maker buy model. That's later, obviously. We need things to unfold to justify that. So for now, this just, at the moment, looks like a stop raid. And DXY and the indices, just the indices in general, there's a pretty blurry correlation going on. They've really been interested in coming down and stopping out all these early buyers that got greedy, right? So we're gonna have to make sure for the S&P we got this, right? It's a mitigation block. So we'll see how that wants to continue to hold or not. Let me see, did I miss any questions? No. But yeah, so hopefully everything has made sense so far. Look, so now we got this order block holding. We got this order block, because it's basically closing inside this order block, right? The body's inside of it. The middle portion of this should be able to become pretty responsive and act as a, propulsion block. All right, we'll see if that wants to continue to hold that. And then it may start to justify us getting back up to these highs and maybe go to our initial idea, which was up here. Right, but that may come a little bit later. And all of this may have been a fake out. But again, we're going to have to see if that could be justified by having a pretty solid run back above the weekly volume imbalance. At the moment, right, since we're in this weekly volume imbalance and correlation is a mess, there's a lot of waiting that needs to happen, right? Anything that you take within this condition, you got to remember that it's low probability. We're a day after a holiday. Correlation's a mess. So the things that ICT tells us that are high probability signatures are not there, right? Some of the stuff that he talks about that make things harder to trade are all over the place. Cracking correlation, day after a holiday, right? We're kind of sideways on the higher time frame, right? Back and forth candles. Like it's messy in there. Consolidation. So all that stuff creates a low probability condition. So whether you want to fight it or not, anyone that's maybe been fighting yourself this morning or fighting the fact that we need to wait, you can only do one of two things. You're either going to listen to the way things are taught and apply them, or do it your way, you know. And if your way hasn't been working, it's probably best to try the other way, right? The other mindset. You know, try it out for a couple months and see if there's a difference, right? If things start to improve, you know, if your stress level declines, because more often than not, that decision will change everything to just get out of your own way. So yeah, now we're getting above this fair value gap in here. So the only way that I would be looking to try to short again is if we were to get back down below that, right? We got one down candle, two down candles, and now we got an inversion fair value gap at a PD array down here. Look at the 50% of the weekly volume imbalance, 50% of the new week opening gap. Perfect stabilization right inside that. Perfect, right? So again, the initial idea was the buy side up here. And because we trust the higher time frame, because we don't get shook out of our narrative easily, I have no reason trying to frame out a further buy. See if we can't get something to get us up there if DXY is going to keep dropping and this is going to keep unfolding. It is a pretty significant decline in here. I wouldn't be surprised though if this huge drop was simply to set up a market maker buy model. But again, if I'm going to look to short, we're going to have to really start to get back down below levels like this, and then I'll consider previous day's low. But I'm going to favor if this continues, right? Especially if DXY drops continuously as it's doing right now. I have no issue trying to seek our initial target, which is up here, which left equal highs dramatically from here all the way over here, right? This is a consolidation as well. Like I showed you on the higher time frame, it's just the way it is. And this is how you have to operate when conditions are like this. And if you want to argue it, you'll learn through fire, just like I had to. It's just kind of the way it is. So yeah, if we move up real quick, get a feel for these upper time frames of what's going on up here. We do have a 15-minute fair value gap. So we're definitely going to want to keep that in mind. It's not something to disregard. We could take it from this low here because there was buy side here and then the displacement. Take it from that low. Right? So this here is the fair value gap. Right? I mean, you could map the whole thing like people normally do, but ICT has specifically mentioned fair value gaps. The most significant, important pieces of the fair value gap have to do where it's actually imbalanced. The upper portion up here has buy side that was offered previously, right? In like close proximity. This part is not. There's nothing in there. There's not a wick. There's nothing in there. So that's how you pick or dissect a fair value gap when you see them. I think he mentioned it a couple times in his charter group stuff, but he mentioned it on this specific thing on YouTube, I think in 2024. I think in September of 2024. But it's not a new thing. This has been here for a long time. But in through one ear, out the other, right? Like most of us do early on because we're looking for specific things. Where the hell is my... There it is. Just looking for the markup. So yeah, we got to see how this is going to behave in here. Again, if we were to get back down below this, right, it's going to turn off the interest, right? We're starting to show some signs that it's going to go and reach for the buy side again. But, you know, looks like if it gets down below this, that's going to be invalid. You know, and all of this was just a simple retracement. This level, after it filled in the fair value gap, it didn't really want to break above this high here. So we'll have to see what happens with this. We got this order block here. We got the 50% of the gap. I can say if we get down below this, that'll be a pretty solid potential bearish breaker here, right down below that. So yeah, that is a pretty convincing drop right there after the retracement. So it looks like we just came up to balance this out, retrade it, and then now we've gotten down below it. So I said if we get down below this, that'll probably set the stage for us to then try to get down below the previous day's low. So I'm going to still stick to that. DXY is rebounding here. We got the Dow finally looking to tumble a little bit. So let's see if that can give us a reaction here. So let's watch this here, right? If it was to, like something that invalidates this, right? If it gets above this and inverts this bearish breaker, that is what basically would turn our attention back to the buy side delivery. But so far it's declined, gave a pretty solid retracement. We do got the previous day's low that's pretty relevant. We are still inside the weekly volume imbalance. So again, still pretty risky. DXY, you know, especially if it doesn't want to rally, it's risky because the higher time frame level can react. You know, it only becomes invalid when it really dives lower. You know, this type of reaction in here off the 25%, exactly at the 25%, you know, triggered in the retracement, and that's also a bullish breaker here on that lower time frame. But again, like I said, getting below this puts my interest away from the buys. You know, until that is proven otherwise, you know, we may end up seeing this continue to drop, especially if DXY can get some legs and hold on to continued buy side. But we'll have to just see what happens in here. So yeah, see if this can't offer something. I really don't like how the DXY is behaving this morning. Let's actually go look around real quick. So it looks like there is SMT at those lows there. Not really. So let's see how it treats this with DXY tanking like that. DXY is definitely taking a nosedive still. So again, it makes it hard to trust that this is going to continue falling like a knife to the downside. Because again, correlation is what it is. You know, the markets are symmetrical and are impacted by one another. And correlation is not right, you know, things could be a little more shaky. That's what makes it low probability if market symmetry is not in alignment. Right? So if you take a trade when there's a crack in correlation, and you take a loss, just know that, you were wrong and things were foggy because there's a crack in correlation. Something's being manipulated in the market, right? Something on the back end that we're not aware of is happening with, smart money engagements. It could be commerce. It could be a multitude of different factors, So we got this run below this low. This low to that high, if this is going to behave as a breaker and it's going to be reliable, it's going to have to hold below the 50% from this low to that high. So we should not come back up into this level. Okay? Because a breaker is a BPR. And what is the market telling you if it breaks through it? That means that the bearish BPR is falling off the table. So it's not trustworthy. Right? So what would happen probably? It would then turn around. We got this fair value gap in here too, right? We got sell side, buy side, sell side, and now we're hanging out below it. Pushing away from it confirms that this is a bearish balanced price range and a balanced fair value gap. It's important that we get the push away, right? If it just hangs around, it's going to keep balancing things out. But, it's an important piece of information there. Yeah, let's see what happens. Oh, shit. Almost knocked crap off my desk. Holy crap. So yeah, 30 points is simply right there. Very small. Yeah, very small. Yeah, if you look at the DXY, we're pretty solidly continuing. This right here was it's a daily fair value gap, this blue box. So now that we're below that, that may start to really accelerate. That type of delivery would upset this as a potential short. If you took this area in here and listened to what I said about the breaker, about this level being used to send price lower, you were already offered 30 points now. Right? If you were quick on your feet, it offered it to you. Yeah, we'll see again. If this wants to accelerate, again, that's going to upset this potential delivery to continue. Still pretty solidly respecting this. This response here is not generally what we like to see if we're engaging like something like a breaker that's going to be reliable or any other model, right? The longer something hangs around a level, and if that's happening plus a crack in correlation, the probabilities are very, very low. If I was to grade this out of 5 stars, it would be potentially a 3. It worked out if you executed exactly at the level that I mentioned, this low of the fair value gap. I said that if it gets below that, it may be used to send price lower. If you would have executed exactly at that, it offered 32 points. And that's all you need. That's all you should be aiming for on days that are after a holiday, if you're going to trade at all. All right, but we'll see what happens here. If we upset this and we get deeper into these levels in here, especially if we get back above this fair value gap here, we're going to really, really look to drive a little bit higher. And then we could take the low here to the high, and we can get some projections if that's going to be the case, right? If we get up above this gap in here. And then we may end up getting price to come up into this level. That would put my attention back in line with this being a potential market maker buy model, right? So in this case, if I was in this trade and I was holding it, my stop would be up here, right? And if it gets too close up there, we're already breaching the 50% level once it gets right up in this level. So that's the final line in the sand. Ideally, this is where you want to see the reaction come from. You don't want to see it spend too much time up here. But again, if it runs up there, how much of a stop was that? 30 points. 30 to catch 30. And so yeah, 1-to-1 was pretty solidly offered. This is not invalidating this idea yet, right? We'll see if it ends up invalidating it. I don't like how it's treating this, right? Because we want speed. Okay, this response here, this high was formed towards the end of the macro. The macro, we traded into a PD array, going into the 650 macro. We went from the 550 macro up here to 610 a.m. Pacific Standard Time. So one macro began the move. The next macro created the reversal, right? Or simply a retracement. We'll see if it's a reversal. We can confirm it is a reversal if it gets above this fair value gap I've been mentioning, and then invalidating this. And again, that would set the groundwork for us to then try to target a little bit deeper premium. Go from like this high up here down to the low. We got equilibrium up here, right? So we'll see. We'll see if we want to leave that previous day's low available. But we'll see what happens here. Yeah, when you leave a macro, right, a lot of times when you're inside that middle portion, when you're not in the last 10 minutes or first 10 minutes or 5 minutes before or 5 minutes after, like within those windows there, you may get caught up in something that's stalling out, especially if it was aggressive in the last hour, right? It's just like a fast London, right? If there's a fast London going into the next session, sometimes it could be a reversal or a slow lethargic delivery because the market knows that people are trying to chase price. Everybody was trying to chase this, right? And so what did it do? It ended up stalling out, giving a reversal. I do really like how this is being respected here. I mean, this is pretty solid respect, right? So this fair value gap is not out of the realm of possibility in terms of it holding and continuing to target this, right? So buys are not of interest at the moment. Only sells are, and this idea is still intact, right? It's just potentially hanging around a little bit longer than I personally like to see it hang around, because when we execute these PD arrays at these specific times, we're expecting speed. Sometimes it'll take a little longer if there's no news or there's something going on, but generally you should see speed. And if you don't, right, if like 30 minutes passes and you don't have any movement, or 15 minutes pass and there's zero movement and it's just stalling consolidated, sometimes it's not the best idea to hold it, because the longer it hangs around, the less likely something is to hold. So you can have a time stop. ICT's mentioned that in 2023, he mentioned a time stop where he gives it anywhere from 15 to 30 minutes generally, sometimes 10 minutes depending on what's happening correlation wise, and then he'll look to potentially cut bait. So this is pretty close. What was it, 17, 27, so that's 10 minutes straight of sideways movement. Still respecting it. DXY is, given a rejection here. We are below the daily fair value gap that may act as resistance though. So us being down below this daily fair value gap on the DXY, while we're being kind of held in here after such a huge displacement, again, it may be putting odds less in our favor that this is going to be a very dynamic delivery. If we close down below this low here, I'll be 100% certain that the previous day's low will be taken out, because then we'll have another bearish breaker. All right, we got a breaker here. We got an inverted fair value gap. Lots of trading to the downside, buy side, and then now we're hanging around below it. So it's acting as it should, right? If it is going to continue to go lower, minus the fact that we're kind of stuck. The bodies of the candles are closing below this fair value gap. All right. So we'll see. We'll see if it's going to continue. Again, it's hanging around a little bit longer than I'd like. If it doesn't move by 20 minutes, 17. If it doesn't move by 7:32, I'll probably recommend that there's a time stop. Right? It's just kind of the way it is. And then we'll look and see if we can find another move closer to the macro. Right? Or if it just displaces pretty deep up into here, you know, that would be something that I would not be too fond of either. All right, and as I say, it looks like it's going to potentially do that. So let's see what happens here. Yeah, that was nice. Yeah, Byron, pretty gross. What's up, Mike? It's insane. Someone is down 5,200 longing NQ. Who would that be? Oh. Uh-oh. Is it one of the people you always tell me about? Oh man. Yeah, we'll see what this wants to do. This is not necessarily something we prefer to see here. Correlation is definitely a problem in today's session. And again, it's to be expected. It's a holiday, right? A day after a holiday. So yeah, this is... Okay, so yeah, that would end my potential engagement in that trade. So now we'd have to wait and see how are we going to treat this in here. All right, so it hasn't entirely closed above the 50%. The candle that I wanted to see react, which generally is the responsive candle in a breaker, which is a down candle here. It's not necessarily delivering how we would like to see it deliver. We do have 1, 2, 3 highs here, so maybe it's a 3 drives pattern. I really don't like how long it takes, and the time stop idea serves us pretty well. Doesn't mean you get in and in 5 minutes, if it doesn't move, you get out, right? Because you know, it may take 10-15 minutes. But when it's doing something like this, when DXY was at a level where it could react from a higher time frame, it could be something that's worthwhile to get out, and then just try to reposition later. There's nothing wrong with positioning later, because sometimes it takes time. And we want to be in the best position possible. Sometimes that's going to require you to toss a particular execution that's outside of like a macro or too far from a macro that you've been stuck in consolidation with, and then just wait for things to unfold later. Watch and see how the initial setup delivers, right? If it does, if it doesn't, you adjust. But, sometimes you just got to wait, see kind of what transpires later on, and then try to find your model occurring again, because the models happen over and over and over and over again. It just matters if you can have the right mindset and a solvent mindset that's not been destroyed from over leveraging and over trading, so that you can identify these things. You know what I mean? Let me see. These accumulations are only generate liquidity. Yeah, I agree. When there is enough liquidity in the market, clear. Yeah, I guess it's more or less like the sentiment. They know everybody's waiting when it's sideways. They know that support and resistance traders are thinking, oh, it's strong resistance, strong support, and it's building the sentiment. And then the narrative on the higher time frame will come into play, and it'll displace towards where they're initially going to on that higher time frame. So we got a run on stops up here. We are still respecting this down candle I highlighted, right? It's not entirely broken out of it yet. So it's just kind of spending a little too much time in there. I don't like the correlation problem mixed with the lack of delivery outside of a macro, right? Like I don't necessarily like that, right? So, I'd prefer to allow it to print a little bit further. So we are still respecting this fair value gap. See how the 50% is still being respected? Pretty solidly too, right? So again, we're not necessarily out of the realm of possibilities to see price continue to drop. The only way that we would be able to look to buy is if price was to get up above this. And then, of course, if it was to get above this high, we have a bullish breaker that would then form. But that's later on. That's not confirmed yet. And I'm not saying it's going to be confirmed, right? We'll see. And we're getting closer to a macro, so we're at 7:30. And yeah, this is pretty telling in here. So let's move up a little bit. Let's see if there's something we could reasonably look at aside from that breaker that we talked about. It's a pretty large wick in here too. Probably can't see it. There's a lot of stuff going on. Got this pretty large wick in here. Let's see, 5 minute. So the 5 minute fair value gap is right there. I think we'll stick to that one. And then, of course, like I said, that lower time frame breaker. This lower time frame breaker is working within the larger structure. So, the lower time frame breaker's been kind of not fully invalidated, but it hasn't delivered that great. We have had accumulation in here. We had a run up, hit the 15-minute fair value gap. So again, this 15-minute fair value gap may end up showing us that was where the root of the move started to target the previous day's low. I still have my attention here until proven otherwise. Okay. And it looks like the time stop idea, me getting out with that rule, kind of got me out a little bit too early. I guess 15 minutes. It's a little bit too quick given the consolidation. But the overall objective, the idea where we're aiming at, still held up. It's still intact. It did offer a secondary move here. The respect of this, it's pretty apparent in there that it's really not too interested in going higher. Buys have not been on the table whatsoever, unless it was to get up here. One of my students, Carlos, did point out the razor model for a buy if you were looking for bullishness. It was here. Those of you in my private group can see it in this chart. If you just take a look at what's transpired. So now we got a low here, high, lower low. So from this low to that high, 50% of that, we should not see it come back up into that, especially because we've now moved away from this balanced price range up here. Again, I really don't like the condition that DXY is in. I really don't like the correlation issue up to this point. It does look like it somewhat may kick back in line, and the SMT was present, right? Higher high in the Dow, lower high in the other two. That's why they're the two weakest or most interested in declining. Yeah, and then this is, of course, outside of the macro. So yeah, blew that out. So that offered well beyond the 30-point target. All right, so the move here was a little early, at least from what we could see in hindsight. And then it just kind of bounced around, took too long, ran up into here. I didn't like how it was behaving. DXY was moving higher, so I exited that position. And, of course, it chose to unfold later. It's how the cookie crumbles sometimes, and rules are rules. And it is what it is. Just a missed opportunity, and there's nothing wrong with that. But the overall structure, the sentiment, the interest for us to go lower has not been turned off, right? It was just I didn't personally like the initial reaction. And we sat for 15 minutes, gave it a chance, and it's kind of the way it is. But again, like I said, getting below this breaker, setting up the breaker, if it's going to trust that breaker, that would most likely be the move that then sets us up to try to get down below the previous day's low. And I think that is pretty solidly the target at this moment. Let's watch the fair value gaps. Let's watch this low in here. See if we can't get price to respect this gap in here. See what happens here. This is a stop rate in here. So let's see how it's going to react to that. Pretty solid reaction into that. Let's see what are the other indices doing. Tracing, got a pretty large wick happening here. Again, getting down below this definitely still has my interest to possibly see if we can get down below there. We're below the 50% of the volume imbalance. We've closed in basically the entire regular trading hours gap. It's got a sell side inefficiency though. Right, so it could want to run up there aggressively. So yeah, let's see if we could stay below this low here. Low, high, lower low. And then we got the smaller one in here, up at the highs, and then we got that larger potential swing in there. Low, high, potential lower low. So if it's going to continue to drop, it's going to have to stay below this area, because this low, that high, we took some buy side here, took some sell side. We've pushed away from this fair value gap that's been balanced, right? So we should be able to see pretty much all of this be treated as a BPR, right? If this is, of course, going to be the move that does send us lower from that 15-minute fair value gap, which we saw right here. Yeah, very wicky, huh? Lots of wicks, up and down, up and down. So let's watch this gap in here. So yeah, we're getting closer to that macro. 745 is when we'll start to observe it. See the DXY here? It's kind of rejecting this, leaving these highs available. It's definitely not super indicative of price wanting to be overwhelmingly bullish. Gee, that thing got super loud. I think just like increased the volume for some reason. Yeah, I've had enough. No more trades, no more risk. Raise them on, need order block to go up. All right, hopefully you didn't overtrade, Mike. If you did engage, remember what I've been saying. Matt said it sounded great. Oh man. Accumulations, if you disrespect in 1 minute. Yes, let's go back real quick. So yeah, look at what's happened in here. So now we've overtaken this fair value gap. So that's not necessarily something that makes me overly confident that we will continue to tank down below the previous day's low. Mike, you know exactly what this looks like. This right here looks very, very telling. So let's see what's happening here. Let's watch that order block here. Let's see what that order block, a little baby order block, delivers. See how this is either respected down here or not as an inverted fair value gap. So we got order block here from this high to that low. Go to like the, what is it? 1 minute. Looks like a very solid purge in there. DXY is falling, so that looks pretty telling that it may want to continue and give us a pretty solid reversal. Does that mean that everything's going to just keep declining? If DXY keeps dropping, maybe not, right? If the bonds keep rallying, that's a bullish indication for us in the indices. So if the DXY keeps this wick happening and just continues to tank, right? We're approaching the macro now, right? So we got to see what it's going to offer in here. But if we could stay above this order block, I'm pretty starting to really think that we're probably going to take these equal highs out, maybe come back and try to attempt this one more time. And if we get up beyond this, that's going to complete the potential market maker buy model, unfolding the ending portion of it, and then the bullishness will continue, and the DXY will look to fail this and then try to take this low out potentially. So that's what could unfold if we do see this want to rally. That's what would support this. But of course, from this high to that low, because it's been so aggressive to the downside, looking to buy in something like this is picking a bottom. Right, so you have to keep that in mind. It's consolidated, kind of seek and destroy type of vibe. Buy side taken, sell side taken, back to the equilibrium from this side of that low. But yeah, so let me look at the lows real quick. Yeah, this is very sketchy right here. And the correlation is just a mess, right? DXY is just back and forth. The indices are kind of back and forth. Well, they kind of just been aggressively to the downside with cracks and correlation all over the place. We are starting to potentially see an inversion in here. We are coming back to the 50% of the gap, right? The volume imbalance, which is also a new week opening gap on the higher time frame. So yeah, let's see what happens here. This high, low, higher high. If it was to get up above this, that would potentially set up a bullish breaker. All right, notice how this breaker we looked at that led to this decline, 50% never got really closed above. So as a result, it just kept holding in there. All these wicks and the bodies closing inside that area, basically inside that PD array, that is an indication that that level was holding pretty solidly. So we're going to watch this too, because this is the previous fair value gap. So let's see if that's going to continue to be valid. All right. I'm not personally interested in picking this bottom. I'd much rather see it run up and then catch a continuation, because it's too many red flags everywhere. I mean, we've got relative equal lows here. The correlation is still a problem. DXY is still kind of moody. So yeah, it's pretty solidly still respecting this. So if it gets above this, my attention will go to these equal highs. Otherwise, this may just be a simple retracement. I can say that if we maybe take out this low here, leave this fair value gap intact down here, and then we displace above this, I mean, that would be a potential idea to target these equal highs. But again, things have to happen. We're still in bearish order flow in here. It's starting to show signs that it may be starting to tip over to the buy side. But that's not a certainty at the moment, because structurally it's still bearish. And the higher up you go in time frame, the more apparent that is. So don't let the lower time frame deceive you. So let's watch the reaction from here. Again, there's nothing in here that I'm interested in engaging other than what we saw earlier, which left without us. Well, left without me. If you held on to it, you probably secured that. If you engage this and you take my advice and take the 20 to 30 points and get out because the conditions are low probability, it was offered there. So whether you held it up till it delivered or took this idea that I pointed out, or if you took the razor model from earlier that I didn't really talk about, those of you that mentioned it from the private group, that was also offered for a buy if you were bullish today. We definitely wanted to see if we can get up here, but from the start, it's just been overwhelmingly bearish, at least for now. Whether that's going to be something that just was used to pull people in, just to reverse or not, we're going to have to obviously continue to wait. But right now, it's not necessarily part of the equation. Looks like it's still respecting these levels from earlier. And of course, the correlation issue is still present. It's something in trading that definitely messes with you a little bit. So it's best to trust your intuition. If there's a crack in correlation, just wait. If things are not crystal clear or trustworthy, based on the things we use, it's much better to just pull back and not try to force things. So now we're inside that fair value gap. So let's see what happens. We had this stop rate in here. Gave a pretty solid reaction here, but ever since it came up back to this breaker, it has not really been favoring any type of bullishness. It's just been gravitating lower. DXY has been gravitating lower. And we have that previous day's low, like I said. So we may end up getting down there. If the Nasdaq targets the previous day's low, the Dow in here is going to target this low. That's a low from earlier in the session. I mean, we got relative equal lows down here, so that's pretty intense. So yeah, in a symmetrical market, DXY dropping like this leads to indices and foreign currencies having the ability to open up to the buy side. Something is not allowing that. And I mean, it's part of the characteristics of a day after a holiday, day before, day of, day after a holiday. These are things that you see, crack and correlation, things just kind of being held because everyone and their mama is coming in. Oh, it was a holiday yesterday. Let's go in and try to make some money and feel good. Then they see a rip-roaring move to the downside and they're trying to chase it. And then, retracements happen. Things get stuck. They've been sideways since 7 a.m. Basically, the whole entire hour has been sideways. Impulse, consolidation. Impulse, small impulse, consolidation, retracement. Not really the same vibe that it had in the 6 o'clock hour that was just ripping to the downside. So if DXY turns here, of course this stall out will probably open up and send price all the way down to the previous day's low there. So yeah, let's see what happens in here. There's nothing I'm overly excited about, like I said. So we got the currencies rallying. That's bullish indication, but we have the indices doing whatever they want to do. It's doing the same thing as a DXY. That is a cracked in correlation market, So the different intermarket relationship validation tools or validation principles, they're not on the table when this is happening like this. So can you really trust the move when things that are literally used to build trust, when some of them are off the table? Not necessarily. Because at any moment, like I said, they could flip the switch and price can rally aggressively if DXY is going to keep declining like this. It looks like they're interested in taking this out, like I mentioned earlier. Again, we were watching early on because we were up here to see if we could support this. We blew past this lower level in here. Like I mentioned, taking that would deliver this as a market maker sell model. And it looks like that's going to be pretty much the case. It's been the case since we got below this. Very sloppy, choppy, not characteristic of a second stage distribution that we normally would like. Very high resistance back and forth, stopping out buy stops, sell stops, buy stops, sideways, slowly gravitating lower. The breaker held up, obviously, the thing that we talked about that would potentially push price lower. But yeah, it's just been really sloppy since 7 o'clock. Where the hell is the... Oh. Let's see real quick. So yeah, now that we got below this inversion fair value gap, it's probably going to use it. Well, it's going to use it as a reclaimed fair value gap potentially. But yeah, this is just nasty, sloppy. A lot of waiting. If you execute it, like we talked about, lots of waiting. And if you didn't take profit, you would have got scared out when it came all the way back there. If we're being honest, right? Okay, so now we got DXY really dumping. Like I said, this box in here, this blue box, that's a daily fair value gap. So we're at the low of it. I said it may have a reaction from that. And so that makes a short idea highly risky in the indices, even though we've seen that it's delivered. Just look at the high resistance. This is the characteristic of a day after a holiday, day before, day of, day after a holiday, right? And of course, they came off the holiday, came off of London session, aggressive. So what did everybody try to do coming off that holiday? Oh, it's going to be a fast trending day. Oh, it's going to run aggressively. Oh my goodness, I'm missing something. And then what's happened since 7 o'clock? After all that happened, when we hit the 7 a.m. or 6:50 to 7:10 macro, retracement, sideways, right? Displacement, sideways, small displacement against the down movement, and then a pretty rapid movement from 7:30. And then once it took the low down here, gave a strong reaction back to the breaker, gave one more attempt, and there's just no follow through. That's how you can describe this. No follow through whatsoever, right? It's delivered enough to take some profit on, right? If you maybe took the high up here for whatever reason at the 15-minute fair value gap, maybe that was something that you trusted would continue to drop against some of the like inversions and stuff like that. It offered a small range there. Not a move I would take personally. So no opportunity for me. This one's set up. It took too long. Ended up getting out because it took too long. It took almost 20, 30 minutes of just sideways, which I'd rather just give that up even if it delivers. Because most of the time when it does that, it's not going to deliver. Today was an exception, obviously. But then The only other opportunity was here. That potentially made sense with that breaker, right? Inversion for value gap. And this was just wild, right? Just came all the way back, then went all the way down, failed to break that low. Got that inversion here, potentially. So we'll see. Is it going to do a similar thing to this over here, right? Is it going to get below that and then use that as the another layer of inversion to then continue to drop? Could be the case. Do I trust it? Am I going to execute that? I mean, we're inside of a macro now, so it seems pretty likely that we're going to get down here, given that we're so close and doesn't seem like nothing's slowing down. The Dow still has those equal lows, so maybe I'll consider it. If it can give one more little retracement into that, I'll consider it. We got a stop rate in here. I would have much rather it came, with one candle, a wick into there for me to execute. If it's not going to offer that, I'm not going to chase this. Let's see, we got these equal lows. DXY just had a rapid movement. Look at that. On a normal day, this rapid decline in here on the DXY would lead to a strong, rapid movement in the indices, especially when the currencies are giving that, because that's the positive correlation, right? Or that's the healthy correlation. Something is happening in the indices not allowing them to move with correlation. So the indices are the liars right now, because everything else is in correlation. The bonds are moving higher, the yields are moving lower, DXY is declining, currencies are rallying. So the only things that are out of correlation, at least for now, is the indices. So does that make this a high probability market to engage? ICT's first rule of high probability, like I said, is whether things are correlated or not. SoftBank sold, let me see. Daily for value gap, may go for it. That's what going up. First is low. Low 50 at the void. Yeah, we're well beyond 50% of the void, that's for sure. It used that 50% here as the responsive level here with the breaker, right? 50% here, breaker. Damn, DXY is so big, it's like the decline is so rapid. It's insane. Maybe SoftBank selling 5.7 billion. I think that definitely has an impact of the Nvidia shares. Yeah, I wonder why they sold it. That's a lot. Holy crap. Yeah, it's not bullish whatsoever at the moment. Yeah, it's high resistance like we expected, right? We started the day saying, or setting the table, saying that things may be harder to trade today. It may not be something that, we could reasonably, confidently want to engage something in. Right away we saw a crack in correlation taking place. And now we see that crack in correlation has continued all through the session. Like I said, this little area in here, that may result in us targeting the previous day's low. Yeah, let's see if that's going to be something that unfolds. But again, we're really, really accelerated already. So honestly, not too sure how much I trust that. But we do have that previous day's low that's in striking distance. But I just don't have enough to be like, yeah, guys, let's just bet the farm on it. like if an execution is to be taken, it's going to be like maybe one contract, just to see if it can slide down there, get a piece of it back from what happened earlier, that little small loss. But yeah, see the hesitation, right? The hesitation, given what I've just mentioned about what we've seen already and the correlation issue, I think it's just best to not engage this rattlesnake right now. It's definitely a day to blow your account, 100%. But this is the thing. These are the moments in time where the rules show you why they're important. Because if we have a habit of breaking the rules, and then a day like this comes, and we're on a winning streak after we've broken the rules numerous times, it takes that one day where we break the rules, and then immediately tilt kicks in. And then what? Mental spiral, blown accounts, needlessly, when today's already been set as a day that's low probability, right? Day after a holiday. We're either going to, like I said, we're either going to listen to what ICT is taught or we're not. And if we're not listening to ICT, who are we listening to? Ourselves, right? Are we personally, if I'm the trader on the internet listening to a mentor, are we the trader that knows the answers to everything? If we're brand new, is our intuition built up enough to be able to go against what someone's teaching that has the results that, in ICT's case, has 30 years of experience, 35 years experience at this point? I mean, we could just see how it's irrational and why, when we choose to not listen and let ourselves get in the way of, good advice, we see why the results end up being the way they are. And a lot of us make that a habit. I know I made that a habit at first. I think I know what's best. Learn the concepts real quick. I get a gist of it, and then, I know what's best. I can trade this day or that day when I wasn't experienced. And then I go in and do that, and I blow the account. And then I go listen to a video, and I'm like, damn, I should have just listened to what the rules were, because they're there for a reason. You know what I mean? But yeah, so far today we're down one execution, one small 21-point loss. I ended up closing it right before it kind of punched up, right? Considered some stuff down here. I just don't like it, honestly. Freaking neck hurts, dude. Sitting at this desk too much, bro. Freaking does something to you. Is that bullish resistance? Yeah. Oh, no, hey, Mike, no reason for the sad face of the confusion. That's negative reinforcement. These are just days that happen. You know what I mean? This is a day where, look at it. It's choppy sloppiness. And you got to ask yourself, you got to ask yourself, would you have felt comfortable in here if you didn't choose to take a trade, right? Would you have felt comfortable in here? My guess is probably not. The only thing I felt somewhat comfortable with was in here after the falling knife delivered and we hit the 15-minute fair value gap, and then we shifted below this because then it had a breaker. Is that my model? Is that a model that I talk about to you guys? Yes. So what is the reason for me not to engage? Well, the Kraken correlation was a reason we could have decided not to engage, right? We just anticipated that it was going to be a low probability day with the lack of news plus the day after a holiday. So those elements layered on top of us coming into the day, look at what it's transpired into. You have to take these things that are being mentioned about certain conditions, look at the conditions unfold that way, and really, really reinforce that in your journal. Because this is not a rare occurrence. When the things that we've discussed today that lead to low probability conditions are present, more often than not, I'd say like 80% of the time, you're going to get this type of delivery. Can you engage it and possibly succeed? Sure. Right? Like if I would have held this and didn't close the stop early because I didn't like how it was moving, if I didn't have the time stop rules that I have, it kind of kept me out of a move, right? That did end up delivering to where, or towards where we were aiming at, which was the previous day's low. So the conceptual idea was correct. The framework was correct. My rules are what they are, though. And if I follow the rules and they keep me out of an opportunity, that's going to happen. That's the pain of discipline. But I'd rather have the pain of discipline and get out of moves that generally, if these certain signatures are in play, lead to a losing trade. I'd rather get out of those engagements and follow the rules and have the pain of discipline than overtrade and over leverage, trying to shoot at everything because I'm getting irritated that it's not moving where I want it to go, and then blow my account and have the pain of regret. The pain of regret lasts forever in a lot of cases, depending on how badly you hurt yourself. But the pain of discipline, it'll last till the next session probably. If you're well within your rules, if you followed your disciplines, if you know you're being responsible, there's really not much of a impact it has. But the pain of regret, sometimes some people can't shake it off at all. And that pain of regret is sometimes the reason that certain people quit and they cut their journey short because they just can't take it because they didn't follow the rules that protected them from the heavy feeling of regret. So my freaking stomach is yelling at me right now. Well, so yeah, I guess we'll keep our eyes on this. We have been up on this for 2 hours. We're about to roll into the lunch hour at 8:30. I wouldn't be surprised if this ends up leading to potentially a fast move, trying to get us down here to off the macro here, the 750 macro. I would really enjoy seeing the DXY retrace in the same instance. We do have the Dow dropping. Correlation is getting a little bit better. So the PM session may be the session or portion of the session that's cleaner. The AM session, a little bit of a mess. That idea that I talked about in here, when price displaced, came back up into the gap, leading to the potential next move. Obviously, that's looking like it's pretty reasonable. Right? If you would have engaged that, stop would have been 30 points up there. Right? You would have been close to getting stopped out. Maybe you would have got out early because that looked a little bit aggressive. DXY is falling too, so you can't use DXY to justify that that's a shallow retracement. It's another reason why correlation issues, when they're not present, it's a problem because you can't use it for all the different ways or all the different benefits that a correlated market has with intermarket relationships. So they kind of strip that off of you. But yeah, it's continuing to drop. Plus, it's cracked in correlation with this too. We really don't like that. That's a really deep crack in correlation, And then, of course, the bonds, they're promoting that we're going to turn around and go higher. Maybe this run lower, like I said, could end up resulting in price going higher. We would have much rather preferred in the Nasdaq that we stayed above the where the hell is it? Where did it go? I would have much rather seen us stay above, if we were going to be bullish, stay above this volume imbalance. That was definitely a line in the sand for me. Because we're breaking down below it, depending on how it takes out this previous day's low, that's going to determine whether we're going to be exceedingly bearish, and this was all just a retracement to, gather up buy side. For whatever reason, leave the gap up here. That's totally irrational. It's not a normal thing that happens. They don't normally leave massive equal highs mixed with a gap, especially if they're right there, and then just turn around and tank. Everybody probably sees this gap, so maybe that has played into things. But then again, something's taking place pretty significantly. I don't know if it's the anticipation of the shutdown turning off. Obviously we're not privy to a lot of the inner workings of things that go on in government. Just we understand what they talk about. And I know that the shutdown's having an effect on this, plus the fact that we came off of a holiday. So the conditions are expected to be a little bit more chaotic, which we talked about. And that's what's happened today, and you can see the result. And hopefully you guys can gather some of the mindset that we've talked about, how we've been able to conduct ourselves today. There has been, at this point, 2 opportunities that did unfold that we called out ahead of time, this breaker delivery. I personally got out of this early. Of course, slightly before it did decide to deliver. We were outside of the macro, so I wasn't sure if we were going to use this to kind of stall out because of the fast movement. That was what was going through my head and why I exited. I wasn't sure if it was just going to hang around further or completely turn because it was hanging around too much. When it hangs around too long in a PD array, it's a problem, and you do back testing and you'll see that this is true and justifies why I mentioned getting out prior to this move here, because it just took too long. Anywhere from 15 to 30 minutes, if it's not delivering properly and just sideways inside of a PD array, could lead to an issue. It may not want to deliver the way that we're anticipating, which is speed, not hanging around forever, but this delivery, the big impulse off the holiday delivery, leading to a stalled out market going into the 7 o'clock hour, that was all purposeful. It went from one macro up here that delivered the sell-off to the 650 macro, which delivered the retracement and then beginning of the move towards the previous day's low, which we highlighted. Once price ended up getting, down here, right? Once it got below this, once it traded down below the accumulation in here, right? All of that helped justify that we're not going to be bullish, right? That it was going to continue to decline, gravitate towards the previous day's low. How it got to this previous day's low was the issue today, not the analysis, like the forecast, like where's price going to go, right? That was not the problem. The problem was how it got down there. It got down there in a low probability, high resistance environment, displacement chop, displacement, deep retracement, right? Small displacement, another chop, return back to this inversion fair value gap, right? Or reclaimed bearish fair value gap, and then just continued to decline. And now we're outside of the weekly volume imbalance, right? So it wasn't the analysis, like in terms of direction, that caused an issue today. It was the style of delivery and the high resistance behavior, which for me personally got me out of this early. So hopefully you guys understand how we broke down the condition today, because that's what's most important. What pulled our attention from the initial idea, which was, okay, are we going to drop lower to then try to target the buy side up here and get to this gap, the regular trading hours gap that we've been talking about? Are we going to use this weekly volume imbalance that we were above, clearly above, while DXY was declining, to continue and go higher, maybe once we took out this London low? Or is it just going to keep smashing through, close below the 50% of the volume imbalance, close below this previous accumulation or distribution in this market maker buy model that happened previously, and then use all those levels to then justify continued move or moves to the downside, targeting previous day's low, right? So that's all the stuff that we kind of had our mindset on today. Plus, of course, like I mentioned, the expectation of high resistance. We were correct that was something that would potentially manifest. And again, the fast movement here was all manipulated to get everybody to race in after the holiday, hungover, whatever the case may be, whatever state of mind people were in after the holiday. Or they were just simply relaxed, came back, after a day off the market and ended up seeing the rapid movement here. and wanted to chase price thinking they're missing something, right? Just for them to pull back, go into high resistance delivery, slowly gravitate to the logical level we targeted since we got below these levels I mentioned, right? 50% of the volume imbalance below the previous accumulation low, and that triggered in the previous day's low likelihood of being targeted, okay? And then again, the entry we pointed out was here. I did just mention this as well. I said that the only way I would look for a potential idea if I was to engage, which I decided not to, would have required us to pull back into this and then look to decline as a result, basically hold on to that. But wasn't enough for me to trust. We're inside of a cracked and correlation market. But yeah, hopefully all that stuff we talked about makes sense. Before we put a ribbon on it, do you guys have any specific questions you guys would like to ask before we leave? Because remember, this is all about you guys. It's less so about me. I'm just here to try to be a conduit, get you guys to understand the concepts, the mindset, the risk protocols, what leads to what, how to trust this or trust that, or not trust this or not trust that, how to build trust in your engagements. So if you guys have any questions, let me know. Otherwise, we will put a ribbon on it, and I do encourage you guys to watch the PM session and kind of see what it's going to result in. See if we can't blow this previous day's low out first. If it does want to, give a turnaround of some kind. Let's observe this here. We've got a run on stops. Lots of sell side raids to deep retracements. Lots of displacements that lead to consolidations, right? Or retracements that end up just being inside of a range back and forth. On the 1 hour chart, we are not 1 hour, on the daily chart, we are definitely in a mess. Right? It's inside the previous day's range here. We did take out the high. We set equal highs here. That was what had me interested in trying to get us to target the upper levels up here, which is also a gap in there. Obviously, we have the full closure of this gap with this previous candle here. We talked about this concept earlier about balanced price ranges with gaps, right? They don't necessarily have to come back up there if there's a candle like this. This is a different scenario though, because there's a gap up there, regular trading hours gap, where there's no trading whatsoever. There's electronic trading, but regular trading hours gaps, there's, even if there's electronic trading that happens, they're still referred to, and generally they act as pretty solid magnets in price. And I appreciate all you guys liking the video. Thank you to the 12 of you that did go ahead and do that. You guys are much appreciated. Hopefully you guys got value today. I don't really see any questions coming in, so I'm assuming that everything made sense. It was one of the more harder days to trade, which was to be expected. I expected it not to be too crazy of a day, and a day that we were going to pull back on our risk a little bit if we found a move at all, which we found one, but I unfortunately got out with a 21-point loss. Simple 3 contracts, right? It wasn't really much. It was like let me see. It was a $155 loss. Nothing too crazy. Very small amount of risk today. I wasn't willing to put more. Which generally we use 5. Basically half an E-mini contract. Unless I'm trading the NQ privately. Which in that case I sometimes use 2 to 5 contracts depending on what I'm focused on, but it's kind of my risk tolerance. I don't do anything more than that. I ain't putting 10 contracts. I'm not I'm not in a hurry. You know what I mean? I'm here to be consistent, not get rich overnight. So the way it is. But yeah. So yeah, watch this fair value gap in here. See if we can continue to maybe run up a little bit further and then try to, I want to take this previous day's low out since we're so close. Doesn't have to, right? But I mean, we're close enough. Unless it, of course, displaces and gets, you know, way up here, then it's probably not going to come back. But yeah, with that being said, I guess we'll put a ribbon on it. Again, thank you guys for liking the video. Thank you for spending time with me this morning. We'll be live again on YouTube on Sunday. Those of you in my private group will be live again as always every day the rest of this week. And you know, we'll talk about FX replay and all the new things that we're going to be hopping into in the organized breakdown of the different topics that I pointed your guys' attention to. If I can pull that up real quick. That being this right here. Okay, so we'll start this on, I have my private group on Saturday. We'll go over some of this. And Sunday I will be making the first 2 videos. And then we'll go over it video by video. One recorded video, but then we'll have a group call with you guys in the private group, my one-on-one students, and I'll answer any questions you guys have, okay? But yeah, and then of course you guys on YouTube, we'll be back on Sunday. And let me know if you guys have any questions, and I'll be happy to make a video related to some of the most common questions. It's kind of how I've made videos here on YouTube. I got a lot about Power 3, counter trend trading, and bias and narrative. We talk about that pretty much on a weekly basis, simply on here on YouTube, and every day in my private group. So links for the private group are in the description for those of you that may not have known that I have a private group for one-on-ones. That enrollment closes November 20th. So if you don't get it by then, you're going to have to wait till the next quarter because I got a lot of work to do with the students that I currently have. So then, of course, you could just join the private group with a tier 1 where you could be on the live calls with us. I mean, there's tremendous value in simply those two. But I have to make sure that I'm available for the one-on-one students that do invest in me as their mentor, right? So yeah, with that being said, God bless you guys. Thanks again for hopping on. Hopefully you guys got value. Let me know if you have any questions. And yeah, let's see how the week unfolds, right? Yeah, don't do anything stupid today, okay? We have the rest of the week. There's no news. You know, if you didn't take a trade, don't engage, in my opinion, because we have the rest of the week. That is not going to be a day after a holiday, right? So with that being said, guys, I'll talk to y'all soon. Have a good rest of your day, and you guys are welcome. You're welcome, George. I'll see you tomorrow. But yeah, take care, you guys.